Hello again, fellow BeachBum traders, and welcome to part 1 of our weekly trading game plan for the week of April 25th through April 29th. And we see the Fed hawks are circling. We heard a number of Federal Reserve officials, including Chairman Powell, come out and say that the Fed is going to be more aggressive, very aggressive in their rate hikes and in their quantitative tightening to kill inflation now, kill inflation now. Several even mentioned a 0.75 rate hike was on the table, although that was discounted. But several Fed officials said that 50 basis point rate hike in May was very likely, and a series of 50 basis point rate hikes would be very, very possible, very probable in the sequence of Federal Reserve meetings. So we saw the Fed hawks are circling, and that pretty much tanked the market on Thursday after Federal Reserve Chairman Powell came out and reiterated that 50 basis point rate hike in May was likely, and that they'd have aggressive Fed plans. And that drove the indices down, the VIX up, the Treasury yields up, and Treasury prices down. And that continues through Friday, as we'll see. So, given that the Fed hawks are circling, how do we handle this, and what does this mean for your portfolio, for your trading, etc.? So how can we make money even though the Fed hawks are circling? So we will see, and we hope you'll stick around, and we'll talk about some strategies, etc. And then we hope you'll come back for part 2 tomorrow. We'll talk about our individual stock picks, etc. Again, based on this data and those strategies. So let's get started. As you may see, we've been talking about what is now acknowledged by the talking heads on CNBC, etc., as a bear market for some time. We've also talked about how we can make money in a bear market. The bears make money too. We have a number of game plans with strategies on how to handle the bear market, how to make money amid rising interest rates, and the fact you don't want to fight the Fed, don't fight the tape. So we'd highly recommend that you review if you have not seen these previous game plans with these strategies on how to make money in a bear market, how to make money amid rising interest rates, and how to deal with the circling hawks of the Fed. Again, we'd highly recommend that you view these previous game plans, and I'll show you in a second how you can find those in our game plans playlist on our BeachBum Trading YouTube channel. Okay, you can quickly and easily find those game plans in our game plans playlist on our BeachBum Trading YouTube channel by selecting the playlist tab, finding the game plans playlist. You can view the full playlist, and then you can quickly and easily scroll down and find those previous game plans like the Don't Fight the Fed, Make Money Amid Rising Interest Rates, That Bears Make Money, etc. So if you view the full playlist, you can quickly and easily scroll down, find those previous game plans, and select the ones you specifically want to watch, or you can just watch all the playlists. We'd be happy to have you do that as well. But I hope that helps, and again, we have other playlists that you can view via the playlist tab on our BeachBum Trading YouTube channel. So again, we hope that helps. Okay, so let's review how the market ended up on Friday, April 22nd. We can see tons of red, lots of blood in the street. Again, when the Fed hawks came out on Thursday, and there were several other talks during the week from several other Fed officials, it pretty much tanked the market. I'm not really sure why. We've been talking about this for some time. We knew that the Fed was going to be aggressive. We knew they were going to hike interest rates aggressively. We knew they were going to quantitatively tighten. So this, should have been no surprise to the market, but it was, and we see how they reacted violently on Thursday and Friday. We would expect continuation with some violent bounces to the upside, as we've talked about the nature of a bear market, how to play a bear market, etc. So again, we'll refer back to those previous strategies and how we're handling that. But we can see, tons of red. Pretty much everything was in the red. Everything's pretty much below its 50 and 200-day moving averages. Everything hit, a bunch of new lows. So again, all indicative of this bear market we've been talking about for quite some time. We can see pretty much all the indices were down almost 3%. So if you had been playing the downside, playing a bear market, you could have and should have been making good money on this downtrend. So if we look at the news, it's going to be related to all this Fed hawkishness, sell off, and then the Treasury yield hitting about 3%, inverting. We talked a little bit about the yield curve inversion. We might talk about that some more and what that means. And then again, we can see also energy declined finally. It's rolling over. Oil had gone a little bit below 100 at some point and bounced a little bit back up. We see nat gas finally rolled over and is headed down. Gold's kind of hovering. We'll see in the futures, etc. And again, this is the home page of FinViz. You can find our affiliate link for FinViz in the description box below, etc. Okay, if we look at each of the indices, we look at a weekly chart of SPY, which is the index on the S&P 500. We can see it broke down below its moving averages, very bearish, headed down. All very bearish indications. If we look at the NASDAQ, the Qs, and we expect to see a similar behavior. Again, broke down below its averages. Again, very bearish, headed down, bear market. And we look at the Dow. The Dow, was running up a little bit and took a major hit on Friday. So again, it failed at its moving averages. Again, very bearish indicator. Shooting star, again, very bearish indicators. And again, the Russell's going to even take a harder hit because of the small cap. So again, it broke down below its 50-day moving average and is headed down. So again, all very bearish indicators on the indices. So again, we want to play this as a bear market. So again, we've talked about all the strategies for that in those previous game plans. And then we saw, on Thursday when Powell talked, the VIX started shooting up. It shot up high on Friday and has potential to go higher as we go, although we're going to get in a quiet period for Fed speaking. Powell's speech, I think, was pretty much one of the last until we get into the Fed meeting on May 3rd and 4th, I believe it is. So, yeah, we'll talk about that in our strategy. So, okay, if we take a quick look at the sector performance, we go to the Groups tab in FinViz. We have sectors selected. We see everything was in the red on Friday, April 22nd. If we go to the week, we can see real estate and consumer defensive were the only ones that were mildly positive to break even. We see the worst performers were energy, basic material, and communications. Energy, basic materials is probably profit taking, as those had been running up for some time, and we saw energy finally rolled over. Again, basic materials probably profit taking and the strength of the dollar. So if we zoom out a little farther, we can see the 1 month positive performance is consumer defensive, real estate, utilities, and then energy is about break even. And again, the worst performers is technology, communication services. So the long-term trends is technology communication services we can see repeatedly are underperforming, and then longer term we see energy, utilities, basic materials, consumer defensive real estate, and some healthcare. So we want to keep those overall trends in mind as to when there are opportunities. What sectors do we want to look at? If we look at industries, again, Friday, pretty much everything except for utilities is negative. Utilities tends to be a flight to safety. It pays dividends. Otherwise, pretty much everything was red. And again, the worst performers, again, profit taking in coal. Coal's been running up. I know a number of people made a nice profit. We see copper rolled over. So again, basic materials, silver, steel, etc. A lot of profit taking in those areas probably. And then we see 1 week, we see lumber turn back up. We see REITs, so real estate. And again, some of those are inflationary, good inflation hedges, and some are more the reopening trade. We can talk about the vulnerability in those areas. We saw airlines, again, reopening trade type stuff. And if we go to a month, again, we'll see very similar real estate, REITs, etc. Reopening plays, and we see farm products. We've talked about that. Agricultural inputs is a positive trend going forward. So hopefully that helps you identify some industries that may have some possible upside opportunity. Okay, if we do a quick review of the economic data that we got from last week, just some of the highlights is Tuesday we got housing data. We'll talk about our strategy with what we believe is eventual rollover in housing due to the increasing mortgage rates when we get in the strategy. Wednesday we had some oil and gas production information, although that didn't really have a major impact on oil and gas prices. Then on Thursday, initially we got jobless data. Continuing job claims was a little better than forecast, so that was positive. Initial was just a little bit worse than forecast, but again, it showed the job market is strong, and again, that just strengthens the Fed hawks in terms of they can raise interest rates and not impact unemployment as dramatically. We saw the average jobless rate was pretty steady. So again, then we had Fed Chairman Powell come out. He reiterated the 50 basis point rate hike in May. He even said the 0.75 was on the table, although he kind of discounted that they would do that. And he reiterated that they're going to be aggressive in their rate hikes and their quantitative tightening to kill inflation now. Obviously, their focus now is on killing inflation. So that drove the indices down, as we mentioned. We saw the VIX drive up, Treasury yields drove up, and Treasury prices drove down. And then on Friday, we got some manufacturing PMI data, which just again reinforces that inflation is hot still, as we've said for months. And we had oil rig counts, so we can just kind of scroll down real quickly. This is on the economic calendar of investing.com, which you can find links in our Discord, on our homepage, etc. So we can see housing. This is looking backwards, so this is March data. So in March it was still going up. Again, mortgage rates have dramatically increased, so we'll be talking about in our strategy how we see a potential rollover opportunity in housing. We see existing home sales started to turn down. So again, these are indications to us of an eventual rollover in the housing. Again, we saw inventories of oil and gas are up from positive, but it really impacted the prices a little bit, as we mentioned, but not majorly. And then we see the jobless claims data, etc. So, and then the Baker Hughes, as we've been talking about for a while, they've been slowly quietly increasing rig counts. And we also heard that Biden's opening up some permits in federal lands, which should increase supply of oil and natural gas. So that's the economic data for last week. Okay, let's talk about the major economic data that we received last week, and then we'll talk about what's in the upcoming week. And just as a quick reminder, please see the Surf the Market Reports channel in our Discord. You'll find a link to our Discord in the description box below, where we try to post near real-time economic data as it comes out. So you'll see as the economic data is released. Typically I go to investing.com and I will copy out the results from that economic data as quickly as I can and post it in this Surf the Markets channel in our Discord, so you can quickly be alerted that it's what the results are and take a look, and then we'll talk about the implications, and we can discuss that in that channel as well. So again, I'd highly recommend you check out the Surf the Markets Report channel, join our Discord, and you'll get near real-time economic data that way. Okay, if we take a quick look at the earnings calendar for next week, it's pretty standard data, not much on Monday. Tuesday we've got some durable goods orders, so again, state of the economy, housing prices. So this will tell us about the inflation in housing, new home sales, how's the housing market doing for March. Again, these are backward-looking indicators, so we might see some flattening, but we would expect still an uptrend at this point. Mortgage rates, we'll see how high, what kind of inflation we're seeing in mortgage rates due to the incoming interest rate hikes, and we see oil and gas inventories. Thursday we get some GDP data, again state of the economy, our standard jobless claims data, again we'll see standard of economy, and then we get some core inflation data on Friday. And again we continue to expect that inflation is going to be hot, interest rates going up. And then on Friday we get some more Michigan consumer sentiment data from April. So we'll see, what how the consumer's feeling. It was a little positive last time. We'll see if that changes. And then the Baker Hughes oil rig counts. Again, we expect that to continue to increase. Okay, we're also in the beginning of the earnings season, so you can look in detail at the earnings calendar coming up and see how that will affect any of the stocks currently in your portfolio, on your watch list to buy, etc. Again, earnings will continue to matter. We see actually the markets are looking for any excuse to drive a stock down. Any kind of miss, any poor guidance, etc. was likely to drive a stock down. So please be aware of what's coming up, not only the individual stock, but any sympathy plays of related stocks in that sector, etc. So again, you can see the earnings calendar in investing.com. We have links on our home page to get there. You can also see a more abbreviated, more immediate list in the Markets tab in Webull. On the Market screen in Webull, you can see what's upcoming in the near term. And we've also started to post in our Discord the Benzinga Pro graphical version of the earnings calendar for this week in the Surf the Markets channel in our Discord. So again, if you want to see a quick graphical view, you can see that in the Surf the Markets channel in our Discord. So we hope that all helps. Again, keep an eye on earnings. Earnings do matter, and again, right now the market's looking for any excuse to punish a stock due to any kind of miss in earnings, miss in guidance, poor guidance, etc., and or with a related stock. So we hope that helps. Okay, let's look at the further data that we have available on the Markets tab in Webull. Again, I like this histogram, and this is very interesting this time as we see a left shift in the decliners. So there's more significant decline, more downward pressure, so this is interesting. Then we'll see the net inflows, and again we see very steep decline in the NASDAQ, although the NYSE was pretty steady. So that tells us something. Again, the NASDAQ technology and communications is under heavy pressure. Then if we look at the industries, We expect, pretty much all red for the day. So we don't see a whole lot of green in the industries. A little education positive. A little lumber. We saw paper lumber a little positive, etc. So if we go to the ETFs, get a better view of what's going on. We look at the markets. We expect to see, downward pressure, down on the Dow, down on the S&P, down on the Qs, down on the Russell, up on the VIX. Again, pretty as we would expect in a bear market. We're going to see the industries are going to all show down for the day. So we want to zoom out a little bit. Okay. So I can only see a daily view for the industries in this tab. Again, we expect to see all red. Commodities. We see precious metals has still got some positivity. So although basic materials was very negative, gold, silver, etc. We'll talk about platinum as well in the futures. We see there's some positivity there. Aluminum, livestock, aluminum was down. Precious metals, again, carbon positive. So again, we've got some metals are positive. And then bonds, municipal bonds, again, the yields are very high, so we'll see some attraction to that high yield in bonds. I-bonds, we talked about I-bonds last week, and there's a reference in last week's game plan as to how and where you can buy I-bonds. It's paying, I think, 7 to 9%. Some of the I-bonds, so if you're interested in that, you can find that link in last week's weekly trading game plan. So we hope that all helps. Now we'll continue. Right now, as of the filming of this video, Webull is offering 5 free stocks when you open and fund an account. Typically they offer 2 or more free stocks, but sometimes they have special promotions, so please check our link to Webull in the description box below. You can also find on the About page or the header of our YouTube channel, BeachBum Trading YouTube channel, and or in the link section at the bottom of the About page, and or in the links section under trading platforms on our home page, beachbumtrading.com, bum without the U. And again, if you use our affiliate link to Webull, you can currently get 5 free stocks when you open and fund an account, and you can see those stocks can be up to $3,000 upon funding your account. So we hope that all helps. Okay, if we take a quick look at the futures tab in FinViz, we can see this dramatic decline on Friday in all the indices. Again, we can see the downward trend. Again, this was a dramatic decline on Friday in all the indices. And we see this spike in the VIX that we talked about. So again, just further confirmation that we're in a downtrending bearish market, as we've been talking about for some period of time. We see kind of the rollover and consolidation in oil. It's kind of hovering around $100 right now for WTI. All the oils seem to be hovering right now, and then we finally see that natural gas rolled over, appears to be headed down. So we expect that trend to continue. We see gold and silver kind of downtrended as well. I think that's more pressure on the basic materials, some profit taking, etc., versus the store value hedge of inflation. So this may present us with some opportunities. Again, we'll talk about in part 2 in our watch list how we may be taking further opportunities in this dip in gold and silver. See, copper came down, and again in part 2 we're going to talk about this opportunity in platinum. This looks like a nice opportunity as we see this dramatic down spike, and again we want to take advantage of that potential overreaction in platinum. and possibly long platinum. So again, come back for part 2, and we'll talk about how we want to play that opportunity in platinum. We see, cattle and hogs, all the agricultural is running very high. Unfortunately, we don't have a good way, an ETF way to short these, but if you want to try to short any of these overextended agricultural plays, like as we'll see in orange juice last week, and so I was really wanted a way to short orange juice because of this overextended play, and then we see it did do a steep decline. Unfortunately, from an ETF standpoint, I don't have one, but again, if you see something like that and you want to short an individual stock in that area, again, that was obvious opportunity in my humble opinion. And we see these continued declines in the bonds. Again, we'll talk about in part 2. Again, we've talked about for several weeks where we really have to wait for the Fed to finish their announcement of how they're going to taper, etc., for this to really reach a bottom, although we'll see these spikes in flight to safety, etc., and these curves continue to invert, and the yields continue to go up. And then we see these Forex opportunities. We see the dollar is still very strong relative to the euro's weak. Yen keeps declining. I will show you in part 2. I took a look at some ETFs for potential plays in these areas, and we'll talk about some potential opportunities if you want to try to take advantage of some of those Forex opportunities using ETFs. So I hope that all helps. So how do we strategize? How do we make money in this market while the Fed hawks are circling and the market is in bear territory? Well, as I mentioned, I believe the next FOMC meeting is May 3rd and 4th, and I believe the Fed is now in a quiet period. So again, the Fed hawks are circling, but they won't be speaking publicly probably until that Fed meeting on May 3rd or 4th. So we kind of expect the markets to be working on the information that they've gotten thus far, which again shocked the markets and sent them negative at the end of the week. So we would expect that trend to continue. So we want to play this as a bear market, a downtrending market with rising interest rates, the looming quantitative tightening, etc., as we've talked about for several weeks. And again, we have talked about how to play a bear market. I won't reiterate the details of that here, but you can see we published a previous list of leveraged ETFs that you can long or short. So again, we're looking in a bear market, we're looking for opportunities to short, sell the rip. We will get these violent bull pops. People see something oversold that they perceive as cheap, etc. So we'll see a violent pop to the upside, but the tendency will be sell the rip and not buy the dip. So you'll be wanting to, again, look for opportunities to short in this bear market. So this list of ETFs you can find in the description of the how to make money from a bear market, and again, this is in the description box below. You can find it in our game plans playlists, etc. And then again, it's listed in the description box for that video. It is also in a pinned message in our ETFs channel in our Discord. So you can go to our Discord, find the ETFs channel, and it is a pinned comment therein. And also it is a featured post in our BeachBum Trading Facebook group. So you can find this list of ETFs to both long or short, any of the indices, commodities, etc. that we've found in the past. So quick and easy reference. So again, you can find it as a featured post in our BeachBum Trading Facebook group as well. So we hope that all helps. And again, we have all of these previous strategies that you can see in these previous game plan videos that we would highly recommend that you review those to talk about, how do we strategize, don't fight the Fed, how do you make money in rising interest rates, and then how do you make money in a bear market. So again, This is the state of the market that we're in. These videos go into more detail about some of these strategies, so I don't want to reiterate them here. But again, you can listen to the further details of that while we await the next Fed meeting, which we just expect to be confirmation of a very hawkish, very aggressive Federal Reserve stance, and we can make money in that market. Again, we have strategies on how to do that, and we hope that that all helps, and we hope that you can make money in this market or any market. If there's any ways that we can further help you be successful in your trading career, make money in this market or any other kind of market, please let us know in the comments below, in our Discord, in our Facebook group, etc. And we will do what we can to help you make money in any kind of market. So we hope this all helps. Please come back tomorrow and see part 2 of our weekly trading game plan for the week of April 25th through April 29th, where we'll talk about the individual stocks, the updates to our watch list that we want to make for individual stocks, ETFs, etc., of exactly how we're planning to play this market during that trading week while the Fed hawks are circling. So we hope to see you back here tomorrow for part 2 of our weekly trading game plan for the week of April 25th through April 29th. We also cordially want to invite you to our new BeachBum Trading Community Discord server, where we can have discussions on all topics related to trading, success in trading, investing, etc. You can see alerts when we make trades, changes to our watch list, etc. So again, please join us in the new BeachBum Trading Community Discord server. You should be able to find a link in the description box below. You can also find a link in the social media category on our web page, beachbumtrading.com, without the bum without the U, and also in the link section on the About page of our YouTube channel, etc. So again, we look forward to seeing you in the BeachBum Trading Community Discord server soon. Wave and say hello. The content of this video was produced by BeachBum Trading. We hope you will choose to also join us in the BeachBum Trading community and subscribe to our YouTube channel. Visit us at our homepage at beachbumtrading.com, the bum without the U. Similarly on Twitter, BeachBum Trading, bum without the U. On Facebook and in our BeachBum Trading Facebook group. Please follow us on Pinterest and on Instagram. All of the links to our social media sites will be included in the description box below, and we hope you will choose to subscribe to our BeachBum Trading YouTube channel and follow us on social media. Thank you. We hope that you like our weekly game plan for the trading week for this week. Thank you for watching the video to the end. If you found this helpful, we hope that you will choose to subscribe to our BeachBum Trading YouTube channel, and please click the bell icon below to automatically be notified whenever we publish a new video. Please also share this with your fellow traders and friends via the share button included below, and let us know if you found our weekly game plans helpful in the comments included below, and let us know how we can improve. What would you like to see more, less of, etc. Thank you again for watching. Good luck and have a great trading week. Bye. If you like this video, we hope you will choose to subscribe to our YouTube channel by clicking on the box in the upper left-hand corner. You can watch another video like this by clicking on the box in the lower right-hand corner. And we have a whole playlist of videos like this that you can access via the box in the upper right-hand corner. Our latest video is available in the box in the lower left-hand corner. We hope you like this and have a great day.